What's up, everybody? Michael Silva here. You are watching the Stock Market Brief Show. I'm going to talk about my thoughts on this rally and some concerning things that are taking place right now, an interesting divergence. I wasn't planning on making a movie today, but this is a pretty large divergence that I'm seeing, and I just want to share it with all of you, get it in front of you, just so you can kind of see what it is that I'm seeing. Now, the reason why I was going to record today is because I'm at a Hedgeye event. Pretty excited about it. It starts tomorrow. I'm in LA at the Lux Hotel. It's pretty cool. And guess what? I'm just going to share some cool stuff. I was eating breakfast this morning because I got here really early, and Tom Hanks walked in and sat down pretty much right next to me. And then I was like, oh my God, that's so cool. Childhood memories. And then guess who comes in like 15 minutes later? Tim Allen. Come on now. Home Improvement? Crazy. All right, let's get into this show. We're going to start right now on one of the divergences that makes a big deal, okay? So I posted this on Twitter. I also made a video about it. This is smart money, dumb money. What do I mean? We're looking at bonds and then the S&P 500. I'm not going to get too much into it because I want today's video to be short. But when bonds put in a higher low over here, S&P 500, the SPY, put in a lower low. So bonds, the smart money, was telling us, hey, we could very well see a rally. Okay, we talked about when we could see it fall. We talked about when we could see it rally. And it's been playing out over the course of time here, and it's been a very helpful indicator. Not only that, we also called this out in the June bottom. The June bottom. Okay, S&P 500 over TLT. This is where it gets interesting. This is a ratio line, okay? So when it goes up, S&P 500 is obviously outperforming the SPY. When it goes down, it means the TLT is outperforming the S&P 500. Not too important, so don't worry if you don't understand that. Down here is the S&P 500. This is where it gets kind of interesting. When the S&P 500 puts in a higher low, but the ratio line puts in a lower low, so higher low, lower low, that can mark temporary divergences or potential divergences where you can see pops in the market. And we saw that here where we saw a run up. We saw it here where we saw a run up. We saw it here when we saw a run up right before the pandemic. And we saw it most recently at the June bottom right here too as well, where we saw a run up. Now, what am I talking about? The bigger divergence that's taking place. It's a little bit more bearish. That's here. It's the same exact tool. And I'll show you on both charts. This one I've always used a candlestick chart on, but see this purple line here? This is something that I shared when I first pointed this out right here at this drop on the S&P 500. Okay? Why did I point that out? Is because on the flip side of this, if the S&P 500 TLT ratio is putting in a higher high and the S&P 500 is putting in a lower high, that is actually a bearish divergence. And you can see here, when it happened, it fell. 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 So why am I calling this out now? Look at this ratio fire off like a rocket ship. Okay, the S&P 500 is moving too, and it still looks like it can have some legs. Now we're coming into some big econ data, but just notice how much far off it is from this previous spike high. So can it get there and this divergence get, X-nayed? Absolutely. But as it stands right now, this ratio is firing off like a rocket ship, making another high where the S&P 500 is not even close. Not even close. And you can even date it way back over to here, right? Or even if it gets over, it's a huge divergence taking place. And that's a little bit concerning. We talked about the Pring bottom fisher on the prior episode, and you can see that this is continuing to point down. And the last time, very similarly, happened over here where the bear market started. We had that rip face and rally, and then we kind of reverted back. This was actually the Santa Claus rally. It was right here where we retouched and retested those lows just about. So this rally is looking like it's going to be running out of steam. Now, timing it is going to be a little bit difficult because I'll tell you what, it looks pretty bullish right now, to be quite honest, and I'll show you why. First and foremost, BPNDX chart, right? The RSI is not overextended to the upside, which tells me what? It means it can still ramp up to over 70. Okay, so it means that there could be potential more legs. If you look at value over growth, right? The rate of change looks like it's about to cross up through the zero line on the rate of change, and that typically can mark. When it crosses up here, we can spark some rallies. Now, when it flips down, now remember, it doesn't need to actually cross up. It might come right back down, but when it crosses up, that's actually it's pretty bullish because you have the rate of change between growth and value, growth and value starting to pick up, right? So growth is going to outperform at a higher rate of change over value. And we've called these red lines on the screen right over here where it crosses down through zero. It's been pretty bearish. It actually marked the breakdown right here, right? So we called that out right before it was happening, and boom, went to the downside, right? So these signal charts, they mean something. Another bullish thing that's taking place is the Saylor to Schiff tool just crossed up through the zero line. Now it's Monday, all right? And one of the reasons why it crossed up through zero is because Bitcoin had a day where it went up 10%, all right? So to think that that's not going to get faded at some point, right, in this context, right, is the bottom in now because of that? Honestly, I get maybe. I don't believe that to be true, but I'm going to be prepared if it is true, right, because it's crossing up through zero. So it is what it is, but it needs to actually hold that level into next week, all right? So that's how some people front run it. That's totally fine. But I personally do not front run. I wait for the cross above zero, and then the next candle that forms, the next weekly candle that forms, has to take out the prior high. So I'll talk more about this when the time comes. It's so early in the week. Now, as we already stated, tomorrow we got some major data coming out right over here. The main one is going to be core inflation. Right, we got the inflation rate, core inflation, CPI data. It's an hour before the market opens. Okay. The 10-year yield looks like it's about to fire off like a rocket ship right now, okay? So if the 10-year yield goes up, guess what doesn't like that? Tech doesn't like that, especially from a relative basis. Tech will get hit if the 10-year yield wants to rip up high, okay? That's just going to be the case. And if it rips up high, TLT looks like a sick puppy, right? It's just continuing to get hammered down here, and it just can't just catch any sort of relief. So is it in the process of hammering a bottom? Maybe, but as it stands right now, it's very, very hard to determine, so be careful there. Another thing to pay attention to is the dollar. It's continuing to just trend up. Now we're seeing a little slight pullback, right? And guess what happens because of the inverse correlation? Guess what? You see the S&P 500 rally, right? You see other assets rally because the dollar's coming off. It's surprising because this is kind of like the VIX in a way. This is like the newer VIX, the cooler VIX. It's not really the VIX by any means, but you get what I'm saying here if you understand the inverse correlation. Okay, but what's interesting here about the dollar coming off here, you got the Bollinger Bands contracting. So as they contract, it leads to expansion. Is that expansion going to be the downside or the upside? As it stands right now, my bias would be bullish, just given the context. And that could change if we start cracking down through that, 107, maybe even lower, to be honest, 105. Like that, even if it comes down to 105, that's still a higher low. So there's a lot of room, okay? But take a look at this. This is the dollar, the DXY on Thinkorswim platform, and this is the lower zone level. This is something that I publish on the Patreon, right? I just want to call out that it is coming into the lower zone as it stands right now. Okay, it came down there earlier today on the prior zone, and then it started moving from that level. So if it comes down here, we may very well potentially bounce. It's below the midline, so this could be the start of a trend more further down, which propels the market up a little bit further, potentially where? Potentially into the upper weekly expected move, which is right over here. The SPY upper expected move is around just above 416. That's a weekly expected move. And to be quite honest, I've been playing the bullish case here I've been trading the TQQs this week and a couple of various other equities, and I'll show you exactly what I did to trade it. I'll show you exactly what I showed to my Patreon group, okay? But yeah, we had a gap up. We rallied. I played it right there, but it was on the TQQs. Actually, I'll just wait till I show you that. But right now, currently, bullish context above a 5-day moving average. RSI is dying out. Momentum's dying out. You got to be careful here. What's going to happen is the report's going to come out and it's going to slash this around everywhere. It's either going to be a fast hit to the upside, and we're just going to go to the move. Or it's going to be some bad news and the market interprets it as bad, where we can potentially even come back down to that 5-day moving average. It's going to be a wacky and wild day. Volatility is still here. It's not going anywhere. I want to take a look at the VIX. The VIX, interestingly enough, was up on the day. Does this mean anything? I don't know. Volatility is up, and the market's up, right? Interesting stuff taking place as it stands right now. So be on guard. Make sure that you're managing your risk. I want to look at the Qs really quick. The Qs, very similar to the SPY, right? If I click back to the SPY, go to the Qs, go to the SPY, go to the Qs, guess what? We're getting big bids in Apple, okay? So that's why they're correlating so well. We're getting big moves in Microsoft, which we mapped out those demand zones in 2 weeks ago, where we're getting bounces from those levels. Now we got to prepare ourselves for if the market starts to just unwind this current rally. All right, you want to do what the uninformed you don't want to do what the uninformed volume does. And the uninformed volume right now is currently running up, so we can play into the trend, but they're not going to know. They're going to chase it to the very end. All right, so we got to map out kind of what may take place. And The way that I do that, I'm going to bring you here into TrendSpider. TrendSpider, I'm using this because it's easier to use anchored VWAPs. And so first and foremost, I posted this, I think it was on this week coming into today, and this was on August 16th. So this anchored VWAP is locked and loaded to August 16th. And basically I was saying here, if price breaks this anchored VWAP, we're going to have a stop below 29.29. This is not something that I typically do, this like intricate on, I give trade ideas, but I just felt like sharing this. Well, it started there this morning. I entered in with a limit order, buy limit, because I had to fly out here to LA, and it came up, boom, and then we closed basically at the high of the day. Pretty bullish looking overall. So it's above the daily VWAP, and it's above the August 16th VWAP right now. So it honestly looks like it can take to 32. That's my personal opinion. It looks bullish, but we'll see how the market digests. Obviously, a big data point. I had to exit my position, unfortunately. So if it breaks up to there, I don't get to reward myself with any of those gains, unfortunately. So if price breaks below this VWAP, which was from this big gap up, start watching for this gap fill. And this gap fill down here lined up at the time with the anchored VWAP from this prior peak, and it lined up with the anchored VWAP from this bottom, and it lined up too with a gap fill, and it lined up too on top of that with a 5-day now inclining moving average. So if price comes down here tomorrow, this could it's just on a I don't think it's going to be, it could be, right? It could be some crazy hit, but if price were to come down here, right, obviously the volume weighted averages are going to continue to move, but that could be a good area to potentially play a bounce from, given the context now. We went from decline to accumulation to markup, okay? But as it stands right now, it looks like the play is to this little green box, which is 32 to 33 on this is TQQQs, but I mean, you could look at the Qs and it looks pretty darn, the Qs, and it looks pretty darn similar as the price action. You can see today it's tightening up, it's wedging right here, flagging or whatever, and it looks like we're going to start breaking out to the upside. But unfortunately, this data drop is going to be very binary. So unfortunately, I don't have like a solid trade idea for you guys here, but I wanted to make sure that you're just well aware that there are some divergences building. We have some overextended stuff, so the signal charts and everything is kind of just throwing us for a little bit of a loop. So take those signals as signals or potential noise, take it how you want, but that is what's on my mind. I'm going to be locked up in a room pretty much all day tomorrow, so I may not have the time to post a video. If something dramatic does happen, I'll try to find some time to do so, and I'll just try to keep it short as well. But hope some of this helps out. Hope you get some insight. I'll see you all later.